Hello, and thank you for joining us. Welcome to the webinar, Powering the Future, Key Insights for Hydrogen Investing. My name is Marilyn de Guzman, and I will be your moderator for this event. Before we begin, just a couple of housekeeping reminders. You, the audience, will be in listen-only mode. You will have, however, the opportunity to ask your questions to our speakers by posting them in the Q&A box. You can find the Q&A tab at the bottom of your webinar screen. You may post as many questions as you want, and I will do my best to get through all your questions after the speakers have completed their presentation. This webinar is being recorded, and the video recording will be sent to all registered attendees after the event. It's now my pleasure to introduce our speakers. Daniel Charette is the Chief Operating Officer of Charbone Hydrogen. Daniel is a 30-year veteran in the renewable and sustainable energy space. He has held leadership roles at NEG Micon, Vestas Wind Systems, and Brookfield Power, achieving nearly $1 billion in sales and managing over $300 million in energy projects. Welcome, Daniel. And our second presenter is Benoit Bellew. He's the Chief Financial Officer of Charbone Hydrogen. Benoit is a seasoned executive with more than 15 years of experience in corporate accounting and finance. He worked at KPMG, Air Liquide Canada, and Hypertech Group, among others. He is an active member of the Chartered Professional Association, Chartered Professional Accountants of Quebec. Welcome, Benoit. And I turn over to you the presentation.
Thank you, Marilyn, and welcome everyone. Bonjour à tous et bienvenue à cette présentation. Thank you for the opportunity, Marilyn, to present this webinar to this valuable audience. Firstly, the first slide is showing exactly what power the world's as of today. So we rely a lot on fossil fuel, and we need really for the climate change transit to the non-fossil energy that represent green hydrogen. We'll explain Charbone a little bit further in the webinar. The map on the right side is showing exactly what type of energy is the majority of a state of a province. Charbone currently is exploring all the parts that are in blue, where remain the hydropower as base load, and zero emission areas that are Ontario, Illinois, and South Carolina. I guess it's important to understand the color of hydrogen, to understand their carbon intensity. Many of the hydrogen has been produced for over 125 years and used. It's not a new thing, but it's a new talk of the town. So Charbone is currently focusing on green hydrogen, which is zero emission, as the opposite of gray hydrogen, which is representing right now 99% of all the hydrogen produced in the world. Of the two last week suggests that we are now exploring white or natural hydrogen to see if there's any fit with our operation for the buying, purifying, and distribution of that hydrogen to our network. Green hydrogen has been key elements to decarbonize the world. Like I said earlier, only 1% of the hydrogen produced all over the world today represent only 1%. Each kilogram of gray hydrogen produced from the natural gas is releasing in the atmosphere over 9 kilograms per kilogram of hydrogen produced, which is not very good for our planet and our carbon print. I think the future is now, because hydrogen is not new, and hydrogen has been used in the industrial sector over the last 50 to 70 years. So the goal of Charbone is really to make a shift from dirty hydrogen to green hydrogen, and concentrating on decarbonizing first the hydrogen produced from methane reforming and move those industrial users from gray hydrogen to clean hydrogen and get prepared for all the new processes that will coming online within the next couple of years, as well as the transport and the mobility sector, where green hydrogen, we believe, will play a major role into decarbonizing that sector. There is a lot of challenges and opportunity into the North American market. But at the end of the day, it's important to understand that the hydrogen molecule has the same properties, whatever the color is. The color only indicates that from what form of energy the hydrogen has been derived from. And at the same time, the most high challenge of the hydrogen molecule is transportation. And that's, again, it's for everyone. So the challenges that we have today is the market is actually dominated by the natural gas and the byproduct type, which is basically chimney flue, where purifying the gas out of the chimney and extracting the hydrogen. The other challenge, like I just said, is the molecule. Low volume, considering the atomic weight of the hydrogen, high delivery and transportation cost. And right now, all the primary use are refineries, fertilizer, and industrial processes. The opportunity doesn't miss. Right now, with 99% of SMR, hydrogen from SMR, I guess that's a lot of ton for Charbone to decarbonize only the North American market. So the opportunity really reside for us into decarbonizing the actual industrial processes, work with the industry to plan what be their needs for new industrial processes, increase the transportation compression of our tube trailer to deliver more hydrogen per load and reduce the transportation cost. And market and public are requiring action right now, so that's a great momentum for Charbone Green Hydrogen project. So Charbone, in few words, I guess the opportunity of Charbone is to right now create a network of a modular and scalable project that will be able to decarbonize existing industrial users in a certain radius from the facility itself, and be opportunistic in the availability of interconnection capacity, as well as having opportunistic approach to the power purchase agreement that we will sign with renewable energy and be connected to base load. On the risk mitigation, Charbone approach has been always in our mind. How do we de-risk these projects? So a smaller approach for us instead of large hub has always been a tremendous help. Fast tracking the project, that's mean shorter time where the cash flow would be a problem, and scale up as the market demand will grow. We have a very experienced team that combine more over 80 years of experience and renewable industrial gas and clean tech that combine manufacturing, business development, financing, construction, and operation. Charbone has a very strong growth strategy with many projects that were identified over the last 4 or 5 years. Right now, we are focusing on starting our production at the Sorel-Tracy site in Quebec, and will be followed by a second project in Detroit, Michigan. We have already announced a project in Selkirk, Manitoba, and another project in Nova Scotia. While we do have other projects in many areas, these will be a focus for 2025 expansion. We do want in our growth to propose and deploy 1 project per quarter. All the project would be in a size of a 2.5 megawatt and have the capacity of a 1 ton per day. The expansions will be varying from site to site, depending on the electrical needs and the market growth. So the first project is located about 50 minutes northeast of Montreal along the St. Lawrence Seaway, directly on Highway 30 that has a very great name, which is the Steel Highway. There is 3 steel mills within 50 miles. We are a quarter miles to the port of Sorel-Tracy, about 10-15 miles to the port of Contrecoeur, the new containerized port that the Port of Montreal is building right now. We have 2 railway sides just behind our lot, and we do have access in a radius of about an hour to Highway 20, Trans-Canada to Toronto, Highway 15 that will lead to 401 as well, and to Interstate 87, 89, 91, and 93 for delivery to US. Our initial phase 1 is connected to the 25 kV line, which will become a dedicated line for phase 1 and 2. And we do have 230 kV line on the property, and just about 150 feet away, we do have access to a much larger power line that crosses the St. Lawrence River. We have also a natural gas pipeline on the property that could be used for different projects, including blending of natural gas at some point, if needed, and it's a high visibility project. The project currently is under revision from the zoning and planning of the town of Sorel-Tracy. We will receive the final construction permit for the first building within the next couple of days. And this is what it look like. So it's a very small, it's a smaller project that will have a footprint of about 5,000 square feet, primarily operation and maintenance building, with again, the upper part would be the concrete pad where the modular containerized first electrolyzer will be installed. We do have, again, a focus on modularity, and we did start with a smaller one, but now we did increase the capacity of this electrolyzer that will have a capacity of 700 plus kilogram per day. This is a kind of a view of the volume when all the 5 phases will be built. So there will be a small building in the front that will be the administration building. The far right building will be the R&D lab to test many new processes with our hydrogen. And the building that we don't really see in the back will be the host of the 25 megawatt electrolysis system, producing over 10 tons per day of green hydrogen. The lot itself is a 10-acre lot, about 400,000 square feet, and the 5 phases are dashed, actually where we can see the phase 4 and 5, 25 megawatt, as well as the 7 to 9 ton per day liquefaction plant. So the total capacity of the project would be about 10 ton. So I'll pass the word to my colleague, Benoit.
Thank you, Daniel, for that first part of the presentation. Thank you, everyone, for assisting. So Charbone is a pure-play green hydrogen producer that wants to deploy the network in North America. So what you see on the slide is a typical plant, what a typical plant looks like at Charbone. But I will maybe highlight more specific points towards our already just explained and presented most advanced project at Sorel-Tracy in Quebec province in Canada. So our project is under lease with the town for more than 26 years. We have, as Daniel explained, up to 5 phases to get to a production around 10 tons per day of green hydrogen, with a sourcing of renewable energy from Hydro-Quebec as a base load. And Charbone is targeting the industrial merchant industries and market in the hydrogen space, where we'll be able to deliver our molecules either by bulk on to traders and also by cylinders. That market is very where the prices are the highest and the margin also. So we're talking of more than 50% EBITDA over revenue projects. And our actual phase one of that Sorel-Tracy project with a full ramp-up plan as near as in 2025 after the start of production this year will be EBITDA positive. So to summarize that phase one, we have access to clean electricity. We have a bigger electrolyzer. We succeed to have lately of 1.75 megawatt. We will be reducing 10 kilograms of CO2 emission per kilogram produced versus other already hydrogen's production as a gray hydrogen. And we have an offtake agreement with Superior and have all the permits in place to be able to finish our construction and be starting our production later this year. Also, that project will be eligible to a 40% refundable tax credit of clean hydrogen announced by the federal Canadian government, where 40% of our CapEx investment of that project that will be producing this year be reimbursable in mid-2025. On the next slide, you can see that Charbone, since 4 or 5 years, has forged strong partnership and relationship to execute our business model. So we're now ready to have access to technology already proven and mitigate that risk for our investor. We're also able to construct and operate our plants. We also have access to customer, to an off-taker. And finally, we are able to finance our projects. And we are completing with US capital a multi-millions financing as we speak. So just to dig a bit more on our offtake, so Superior Plus on next slide, you'll see that they just acquired Sorel-Tracy, an hydrogen already well-known hydrogen distributor. And it gave us, to Charbone, the access of a network of more than 780,000 of clients in North America. On the right side of the slide, you can see on the map where there's green and red colors is already where Superior is making business and delivering hydrogen. And also the blue one, where it's already a prison of Sorel-Tracy or Superior, which could lead to other potential customers for Charbone. Charbone has competitive advantages. First, our approach is having a cost-effective approach, while we are proposing the same molecules of hydrogen, which is the way we produce it is green, but the customer doesn't need to invest anything to change to us to provide to get their hydrogen. And our decentralized approach, by locating our plants near to the end users, minimize transportation costs and permit us to be offering competitive pricing. We also have an offtake agreement, like I just mentioned, with Superior, and have access to an existing extensive North America market. We have access to low-cost renewable energy by being decentralized and having located location where we can start producing now. And it's base load, so that it will allow us to be reliable and reduce our production costs to the customers. We also have strong strategic partnerships that will allow Charbone to lower our costs and accelerate our deployment and have access to equipment in a timely manner. So we are a pure play of green hydrogen as a green hydrogen producer. And investing in Charbone means sizing, let's say, 89 billions in hydrogen market that is available immediately. As Charbone, as is still on time to get in production later this year in 2024. You have also have you will have the chance to have access to a Charbone that will secure significant market share. And having also the support and being backed by government entities, both Canadian and US, where our project will be available to the refundable 40% investment tax credit mentioned in Canada, and also the PTC of $3 per kilogram produced on the US side. Charbone, investing in Charbone is having access to a first mover that can rapidly deploy our plans to secure in the next 1 to 3 years our position and capture market share. So finally, Charbone as a decentralized, scalable plants, close to end users, having access to low-cost energy, and reducing transportation costs to offer competitive pricing. We have access to low-cost energy source, reliable, stable, as a base load sourcing. We also have ESG principles and certification, and our production is sold to an off-taker. So Charbone is financing itself, is on plan to start producing near this year, and is providing any investors the access to a producer of green hydrogen, and also an expert in hydrogen that could partners with any white hydrogen exploration companies. So thank you for your time, and Daniel and I can be available for any question.
Thank you, Daniel and Benoit, for that presentation. We are now opening the floor for questions from our audience, and we do have some questions coming in already. Just as a reminder, again, everyone, if you want to ask a question, just post it on the Q&A tab. And yeah, so we have a first question. Please take us through the financing arrangements that enabled your success or growth. And does your growth strategy incorporate the UK markets?
Charbone is focusing, like we said in our presentation, on North America market, but we haven't mentioned yet and either announced, but we are also exploring and open and discussing with other opportunities worldwide. So stay tuned for that. In terms of financing, I cannot disclose, let's say, specifics as we're a public company publicly traded, but I can say that is coming soon. Stay tuned for an announcement, and we're completing that as we speak.
You want to add to that, Daniel? Or...
No, I'm good. Thank you.
Our next question is, who would be your largest customers? And maybe as you answer that, maybe talk about some of the strategic growth areas that you're seeing for green hydrogen and how can stakeholders accelerate that growth?
I guess right now, the targeted customer are the mid-sized to small-size users of hydrogen that are maybe feeling that are not well deserved by the actual market. So industrial merchant market is our first customer. With a production of 1,000 tons per day on phase 1, we cannot afford at this point what you can call the very large user that use hundreds of tons per day. So I guess the question is more, our largest customer right now, like Benoit mentioned, is Superior Plus, Certarus, which is kind of the distributor is responsible for all the sales. But the sector that we are looking at is heat treatment plant, aviation sector, certainly some petrochemical users, steel makers that are making a test on decarbonization. That will be our first phase 1 and 2 customer. While we will be processing, we will be looking at much larger customer that will be using 5 to 6, 7 ton per day.
Thank you for that. Another question is, what are the production cost metrics that one should use when comparing hydrogen companies? What are your industry averages for this metric?
I can say that we are in the industrial merchant market, like I said earlier, which I can say we can estimate, let's say, $6 to $7 per kilogram of cost of production. And we can say that is more the double, let's say, 5 times of that cost, the prices that we can see in the actual market right now. And also don't forget that there's a significant portion of the transportation cost that is included in the final price transferred to customers. That's why the decentralized approach of Charbone and locating our plants nearer to the end users will permit us to offer competitive prices and generate very good margin.
Maybe as a follow-up to that, I think speaking of costs, the International Renewable Energy Agency says in 2019, green hydrogen was 3 times more expensive than gray hydrogen. And I think some numbers put that up to 6 times more. What are your thoughts on what needs to happen to bring the cost of producing green hydrogen down and enhance competitiveness?
Yeah, I would take part of that answer and then Benoit can fill up. I think the point, yes, of course, by the price of natural gas to the price of electricity to the electrolyzers and the need of those kilowatt hour at the facility, production facility itself, yes, gray hydrogen is cheaper than green hydrogen. But like Benoit explained earlier, the advantage of the decentralized project is that you would produce at the lowest cost possible green hydrogen and then only need to transport it 2-3 hours away compared to a larger SMR facility that will be located 1,000 miles away and where the cost of transportation will multiply by 6 the price of the gray hydrogen. So at the door of the customer, our actual number shows that we will be competitive because of the transportation, reduction on the transportation cost.
Another question, you mentioned targeting regions like New York, Ontario, and California. What key factors make these areas attractive markets for Charbone's green hydrogen solutions?
Those markets are primarily focused because they are heavy industrial area that have many industrial users using hydrogen. So we are focusing on those areas, particularly because we understand the market and we know that we will be highly competitive in those markets, with the exception of California, I would say, because yes, California need green hydrogen, but because of the cost right now of the power out there, it's kind of not reasonable to think that we will be highly competitive within the next 2-3 years. But the long-term strategy in certain area will be to make sure that there's a specific tariff for green hydrogen production that will have to be competitive against the cost of gray hydrogen and the distance to deliver it.
So maybe just to add on that, so summarize it, Charbone has worked in the last couple of years to identify the right location where we can have access to renewable energy and at the right costs. to be able to start production in the near term, and also next to already existing hydrogen end users market that wants to switch to green hydrogen.
Another question, which companies are your greatest competitors at this time?
Greatest competitor right now are kind of the 4 or 5 major hydrogen producers that have been there for 60 years and thinking that they have a monopolistic area that no one will jump in. But I think our competitiveness will come from smaller hub, much on the size of a node, been located, decentralized, and located less than a few hundred miles away from the actual users.
Another
But
question.
right now we have a window of entering of maybe 10 to 15 years, where those competitors have objectives of 2050. But we do have a plan of having 16 plants by 2030. So Charbone is ready now, is having all the puzzle in place to enter that market. And because we're listening and we're aware of what the customer needs and wants, and the needs, and they would like to decarbonize their processes and get clean hydrogen. So that's what Charbone is flexible and will be able to offer to the already existing hydrogen buyers.
And several questions here from one of the attendees. My understanding is that you're using electricity that is from a green source, but in principle could be from any source of electricity. If you're using a proprietary method, how well proven or validated is the method? And in addition to your distribution agreements, what are your competitive advantages? What would prevent current players in the market from moving to green electricity? That's a question.
Right now, I would say that Charbone has always stated that we would be connected into the local electricity network, buying as much as possible green electrons as they are available on that grid. The word energy transition really means gradually changing. Some maybe in some of the states where, like the first map I did show, the majority of the grid may be not completely green, but Charbone has engaged itself to acquire as much as green and low carbon intensity electron that they can, and provide as green as possible its hydrogen until the grid is becoming more green and green. There is no proprietary method on being connected to a grid.
So maybe just a follow-up question on that. Like, how do you, like, you know, hydrogen is currently still a niche market. How can green hydrogen or low carbon hydrogen play a bigger role in your view in global decarbonization? What are some of the strategies that you're looking at to take it more mainstream?
I guess this is one of the misconceptions of hydrogen. Hydrogen is not a niche market. There are hundreds of million tons of hydrogen used for the last 100 years, only in North America. Texas is the largest hydrogen producer in North America and probably in the world. Hydrogen in California is in 100 million tons per year as well. So hydrogen is not a niche market. What may be a niche market today is green hydrogen. But again, green hydrogen is hydrogen. So we just replace the type of color and the greenhouse gas emission made by the dirty hydrogen or gray hydrogen. We're just moving it. So it's not really a niche market. Right now, a refinery that is using hydrogen to remove the sulfur out of the petroleum product could use electrolyzers instead of using SMR and natural gas. So hydrogen is not a niche market. Green may be today, but it's not.
And I would like also to add that the hydrogen market is a very tight position between the demands and offer. And there's a lot of demand. The demand is also increasing a lot every day. And we're at the start of an energy transition where there's renewable energy as hydrogen that needs to play a great role. So as Daniel said, there's already a massive and vast already hydrogen application in the industrial sector that is not, it's unknown by majority of people, as is B2B markets, right? But when we're talking more to public, let's say, concept, while we're talking about mobility, for example, that's something is coming, that's something existing. So it's at the start, but it's coming. So Charbone is mitigating the risk for investors in Charbone, as we're targeting already having plans to generate revenues and margin and high return on investments with an existing market, but is also positioning itself and increasing its capacity for all those other technology as mobility, as any other ports or aviation that will use in a certain time hydrogen also to decarbonize, let's say, our planet.
Another question. You mentioned in your last press release that you're aiming to operate 16 green hydrogen facilities by 2030. What are the main milestones or partnerships you believe are important in order to achieve this goal?
Benoit, you want to take it?
Yeah, so our first milestone is the start of our first flagship project at Solar Tracy this year. And then, as Daniel said, we have a second one in Michigan. But we have an ambitious plan of installing a new electrolyzer every quarter. And for that, we are discussing and finalizing strategic partnership with suppliers that will be able to provide that. So Charbone has access to multiple suppliers right now, like I said, being able to negotiate the good cost for our equipment and also the availability at the right time. So Charbone is also finalizing financing to deploy our growth and actually concretely complete our plan.
And next question, I think you might have mentioned this before, but maybe you can elaborate. The energy source to split the hydrogen, is it green or are you using general electricity?
Yeah, in Quebec, in Manitoba, in Nova Scotia, we have access to 100% green electricity, green electron. Be the same thing in others area, like in Michigan, for instance, where we are having discussion with the utility that has a green program, and all the energy that will be used to split the hydrogen will come from the grid, but will be acquired through power purchase agreement with renewable IPPs and local utility. So yes, the answer is using a green electricity.
Is there a market price of hydrogen which can fluctuate significantly, or can you agree long-term pricing?
I guess right now, all the strategy of Charbone is to execute a power purchase agreement with the different utilities where we have previsibility of the increase of that electricity over the lifetime of the project. So in our case, in the electrolysis market, the biggest OPEX cost is the electricity cost. So as I explained in other webinar and conference, the chance that we have right now is the electrolyzer are getting more economics as we grow, as the demand grow. The electrolyzer capacity and efficiency is becoming better and better as we go. So I guess and more user will use green hydrogen, more it will be easy to get to a certain economies of scale within our plants. So the price, hydrogen today is not really a commodity. It's more a merchant market where it goes by the demand and the availability of the product.
And maybe if I can touch on the price of hydrogen. So there's two phenomena that can explain why the prices will go up. First, like I said earlier, it's a very tight market and the demand is increasing every day. So there will be a new producer that will need, as Charbone, to come into the market. And secondly, for sure, the way of having not much clean hydrogen and the increasing of demand also for clean hydrogen will permit Charbone to sell at a very good price. But if we look at the industrial market sector that Charbone is positioning itself, we see that for green hydrogen, it's more than $30 as a conservative assumption per kilogram right now into the market.
Another question from an investor. Why are you seeking investors given you are approaching revenue in 2024 and by the outlook significantly self-financed, EBITDA 50% and growing year over year? Is the cash flow runway a concern for the company at this stage?
It is a concern as we speak. We are closing a financing and confidence on that. So we are still good for our plan timeline.
Next question.
I admit maybe the first part. I'm not sure if I'm answering all the question though.
I think so. That was the main question. Is the cash flow runway a concern?
Okay. Thank you.
Next question. If you deploy remote modular hydrogen production facilities, you will lose the advantage of low-cost electricity from Quebec. How will you be competitive in that environment?
I guess right now we need to just clarify that we are not deploying remote modular hydrogen production. We are installing hydrogen production plant within the distance of industrial area where the consumption is located and where there's electricity and grid interconnection available. So I don't think that low-cost electricity right now can certainly be sourced in many areas, and we don't have to be remote for that.
We have more questions here. I'm just going through them. Okay. Does Charbone have Texas stakeholders or partners?
Yeah, not yet. We are in discussion with many people out there, but right now, one of the first projects that we looked at 4 years ago was located northwest of Houston, and we did explore that area. Unfortunately, it was much far away from our own base here in Montreal, and we decided to concentrate first our efforts in our backyard. But yes, Texas is in our plan, and the demand for green hydrogen is there. The renewable energy is there as well, and I think it would be a great place to install 5 to 10 ton per day pretty quickly. But I guess the point is, right now we have enough project on our plate for the next 12 months, and we're not there yet, but we'll come in Texas, that's for sure.
So another question is, in order to be green hydrogen, do you need to use 100% green electricity? Yes. Simple, straight.
Or hold on, just make maybe something in bracket. In the US RRA, the production tax credit and the investment tax credit are calling for low carbon intensity. Low carbon intensity could be semi-green hydrogen with a certain number of carbon intensity. So this will have to be looked at for each of the project. But in some area, you need to be 100% green.
We only have time for one more question, and it's from another attendee. How feasible is your plan to expand by a new plant each quarter? Could you provide insights into the key factors that will drive this aggressive timeline?
Say that this will be the need and the demand of the hydrogen. Right now, our fast track project, I would say the only red tape that we have are two major red tape. The first one is the interconnection availability, and the other one is the zoning, planning, and permitting of that particular area. To go back to Texas, the permitting part of it is about 2 weeks, and probably the access to the green electricity would be a matter of being located aside of a large substation or a power line. The mobilization of all the equipment, when you sign the partnership and agree to have an electrolyzer and the balance of plant of equipment delivered to the site, this should be done in an order where the construction of the site for a first 2.5 megawatt project with 1 ton per day capacity would necessitate less than about probably 18 to 20 weeks from mobilizing on site and the commercial operation date with the modular approach.
Well, that's all that we have time for questions. I guess for the last time, I think Daniel and Benoit, if you wanna share your contact information, and if anyone who would like a copy of this presentation, Daniel and Benoit had mentioned that they'd be happy to send that to you. Maybe share your contact information. There was a slide before this. So, and if they need more information, Daniel or Benoit, about Charbone, can you talk about how they can get in touch with you?
And you may want to send us the question list. So if any question has not been answered, we'll be able to answer them.
Sounds good. Thanks everyone again for joining us for this webinar. Again, this webinar has been recorded, so all the registrants will receive a recording of the webinar very shortly. Thanks Daniel, and thanks Benoit for joining us, and thanks everyone for watching. Have a good day.
My pleasure. Thanks everyone.